Will the world crash if Bitcoin goes to zero? A trader in Singapore refreshes 5 times. A student in Lagos whispers, no, 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 because he bought at $62,000. A guy in Texas laughs, glitch. Then he refreshes and stops laughing because it doesn't change. For the first time in Bitcoin's history, there is no bottom. Is it just Binance? No, Coinbase too. Kraken, everything. Exchanges freeze withdrawals. Screenshots flood timelines. 1.2 BTC to $81,000 to 0.15 BTC2. That was my emergency fund. 3 BTC2. That was my house deposit. A guy who borrowed $25,000 to buy at $60,000 still owes the bank, now backed by nothing. In Nigeria, some used Bitcoin as a dollar hedge. In Argentina, it was an escape from peso inflation. In the US, it was a bet against the Fed. At $66,000, while it was almost half of its all-time high, it felt like the future. At $0, it feels like betrayal. But personal devastation isn't systemic collapse. Yet, a week ago, someone tweets, if Bitcoin goes to zero, the global economy collapses. It gets 200,000 likes in minutes. Because that's what people believe. Bitcoin isn't just an asset. It's digital gold. It's rebellion. It's freedom from banks. It's a middle finger to governments. For some, it's hope. For others, it's a religion. So when it hits zero, it doesn't feel like an investment failing. It feels like an idea dying. Here's what most people miss. Bitcoin isn't just retail traders anymore. There are spot Bitcoin ETFs holding real BTC for millions of investors, retirees, index fund holders, people who don't even know they own it. When Bitcoin hits zero, those ETFs don't dip. They vaporize. Trillions in market cap erased across crypto-linked products. Now look at corporations. Some public companies hold Bitcoin on their balance sheets. At $67,000, it looked visionary. At $0, that's a write-down so large it wipes out equity. Stock prices collapse. Shareholders panic. Lawsuits begin. And then banks. Banks don't hold massive Bitcoin reserves directly, but they do. Provide custody services, extend credit to crypto firms, offer collateralized loans backed by BTC, clear ETF trades, finance mining operations. When collateral goes to zero, loans default, credit lines freeze, not 2008 level, but painful. Contained doesn't mean harmless. But Bitcoin goes to zero, and the lights stay on. Why? Because Bitcoin isn't the plumbing of the global economy. It doesn't run hospitals. It doesn't clear government payroll. It doesn't settle most global trade. Wall Street treats it like a high-risk side bet, not the foundation. This isn't 2008. In 2008, banks collapsed. Credit froze. Businesses couldn't function. That's systemic failure. Bitcoin crashing, that's localized devastation. Huge, painful, but contained. Now Wall Street reacts. Stocks of crypto-exposed firms crash. Tech stocks dip in sympathy. Risk assets sell off. Because if Bitcoin can go from $68,000 to zero overnight, what else can? Gold spikes to $7,000. Treasury yields drop. Investors flee to safety. But the banking system doesn't collapse. ATMs still work. Payroll clears. Planes still fly. This is not 2008. Because in 2008, the failure was inside the banking core. This time, it's at the speculative edge. The casino burned down. Not the city. Now it gets uncomfortable. Politicians who warned about crypto say, "We told you." Regulators move fast. Stricter rules. heavy surveillance, more control. The argument becomes, see, decentralization failed. We need stronger centralized systems. Central bank digital currencies suddenly look attractive. Governments push tighter monetary oversight. Privacy advocates lose ground. And here's the controversial question. If Bitcoin, the symbol of financial independence, can go to zero overnight, was it ever independent? Or was it always dependent on trust in exchanges, liquidity, and regulation? Because Bitcoin doesn't live in isolation. It lives in a world of banks, payment processors, electric grids, internet infrastructure, governments. Take those away, and the code doesn't save you. The world doesn't collapse. But three things do. 1. Retail confidence. 2. Speculative tech capital. 3. The myth of unstoppable decentralization. For years, Bitcoin at $68,000 felt inevitable. Digital gold, finite supply, number go up. But price is not mathematics, it's belief, and belief is fragile. When enough people decide something is worth zero, it becomes zero. No matter how elegant the code is, so would the world crash? No. Hospitals will still run, governments will still tax, companies will still produce, but something deeper would shift. Trust in digital assets, trust in inevitable narratives, trust that technology alone can replace institutions. And here's the most controversial part. If Bitcoin going to zero doesn't crash the world, then maybe it was never systemically important, just systemically loud. Bitcoin going to zero wouldn't destroy civilization. It would expose how much of modern finance runs on stories, and how quickly stories can die.